Hey everyone, this is Andrew. Welcome to Atomo, Wednesday, March 15th, 2023. Beware the Ides of March. Europe, banking contagions coming for you. In this video, I wanted to show you a bit about the bank term funding program that the Federal Reserve put out. This is a document from the Federal Reserve giving you some information on how this bank term funding program works. So this is not financial advice, no financial advice, no medical advice. Keep it peaceful. You know, what's the other advice? I can't. Medical, financial, legal advice, all that stuff. Just take this as fun and entertainment. So bank term funding program. So as we saw, there was a banking problem in the USA over this past weekend. Talked about it in another video, and I had a bit more of the geopolitical, possibly slants on that. Just want to get down to some of the nuts and bolts of the program. So here's what they're doing. So if you are a bank and it gives you a definition of a bank, then you are eligible for the program. So if you are a leveraged loan provider that is not a insured depository institution, nope, it's not going to be a place for you. So if you're just giving out car loans, for example, and you hit a pinch of problems, this is not going to help you. But if you are a bank like Silicon Valley Bank, for example, then this is something that you can use. Now here is it is a loan. Okay, this is a bailout. This is a bailout. Not a bailout. It's a loan. Okay. So here's how it works: is you must have eligible collateral, and that collateral has to be eligible for purchase by the Federal Reserve banks in open market operations. So there is a list of what the Federal Reserve can purchase when it's doing its purchasing operations. And if you have those assets, it will gladly take them. Those assets have to be in your possession prior to or as of March 12th, 2023. Okay, so you just can't go and find some junk assets, get them on the cheap, and then hand them into the window at par. Okay, because that's the other thing that they're doing is here collateral valuation. If I jump down, is the collateral valuation will be par value, no haircuts, 100%. Cool. And advances limited to the value of the eligible collateral. Okay, all makes sense. The rate is the overnight index swap rate plus 10 basis points. So you have to pay whatever the rate is at that point in time, plus another 10 basis points on top of that. So that kind of hedges against going and perhaps, look, here's a bunch of other collateral that you can have. I just want to trade it in potentially to get better collateral since you're taking it at par. Well, maybe there's a way of doing that. I just don't have the technicalities here. I'm not thinking like a bank thing. Oh, how could I give you some of this collateral to buy some of that collateral? Like, oh, treasury yields are changing, so maybe I can get a different set of treasuries and trade my old treasuries in. That's a possibility. It doesn't look like in the previous video, I thought this could start a sump pump of pulling treasuries out of the global market. And as we got into the details, there are some things that will not allow that to happen at this point in time, but it does set it up. Just a few amendments here, and you can actually possibly pull treasuries in from the world at large and capitalize your regional banks a bit differently. But there has to be another. I think there's a second piece to that. Haven't quite figured out in the 3D chess game at this point that's being potentially played allegedly. Okay, it gives you can borrow this stuff up to a year. There's no additional fees, just whatever the rate was plus 10 basis points. There is a credit element protection of 25 billion. Not a lot, but this is not it's not really a credit thing. This is more of making depositors whole thing, because with banks, a lot of banking money is tied up in, it's loaned out. So if I have deposits that come in, given fractional reserve lending, I can lend out a multiple of money in excess of the deposits that I'm holding on my balance sheet. But if people come in and rip those deposits out because now they caught wind and are fearful, they pop those deposits out. Now all of a sudden you're illiquid because you can't go and knock on people's door and says, I need to take your mortgage away and liquefy your asset of your house in order for me to capitalize my bank. You can't do that. Okay. So in order to make those depositors whole again, then here you go. They can go to this this program, get the money, and ensure that you're okay. So if you have depositors that are running away from your bank, and in some cases, if it was your mismanagement, then rightly so. So I'll put this information into the description below so you can take a look at that. But a little bit of story time here is there's a bit of analogy, especially with something like Silicon Valley Bank. And I'm just going to put a little more of the allegedly hat on here and do some story time. So take this as potential fiction, but you might have to wait the 6-month lag delay to see a bit more of this coming to fruition. But let's think, okay, I'm here in Canada and my bank provides you liquidity for making backyard ice rinks. So that's like analogy of my vanilla banking. If it's just deposit banking and I'm giving you a loan of water for you to go out and create a skating rink in your backyard, well, here's, I give you the faucet. Here's, you come with a hose, and I'm the bank. Here's the hose, faucet. And so you go out and you can take that and you can spray that water around, ice it over, and make a nice skating rink. It's like, okay, cool. But let's say that I got a really big faucet and all kinds of water can come out. And you know what? Because we're at zero bound. So what I mean by zero bound is, remember when the Federal Reserve and even the Bank of Canada had interest rates at remarkably low amounts, then if I were to use that hose and water analogy, it's like I could just blast water all over the place. And you can do things like, oh, I made the ice rink, and then people are going, oh, I'm going to make some ice sculptures, and well, then I'm going to go spray some into maybe some water tanks in my house because I want to save some of that water, and I'm going to fill up my water barrels. Buddy comes along with a huge water truck and they fill that up for almost nothing. And next thing you know it, I'm like kind of the waterboard freight and trading company, just throwing water all over the place. And my employees are having a great time making crazy little videos of all the little, diversity stunts and things that they do. And we just kind of forget about what we're doing is making ice rinks, and that was the value. And heck, we even leave the hose on and don't even turn off the faucet, and just sits there and just floods everything. And just people come, they just start taking the water for whatever purposes. So probably not sustainable, because that water is coming from somewhere, and that primarily the taxpayers. Because in banking, one of the ways that we fund the whole mess is by passing bills, okay, or creating some sort of spending. So let me use kind of an example here. Just say I have some faraway country, and faraway country had some other big country come go bang, bang, bang. We don't like what you're doing with our historical citizen and people. We're going to take over parts of the country. And the leader slash actor of that country Ben's like, oh, no, you can't do that. And, calls up his friends over in your country where you got all this water spraying around saying, I need a little bit of that water diverted over to me. It's like, oh, okay, well, in my bank, I know that I got a bunch of people who are sitting in my governmental house. We'll have them allocate some money, and then we'll route it through my bank, and then we'll send some over to you, okay? Or water in this particular case. Cool, and call it an aid package. 50 billion cubic liters of water. You'll get 50 billion cubic liters of water. Well, not exactly what happens here. So then what happens is, well, okay, so we get the big tranche of water that comes in. And then what happens is, well, one of my particular customers, they'll need some water for some certain special projects that they have. Another one will need some water for their re-election campaign funds, but they'll make sure they keep a lot of business at my bank. This other person needs a cut of water, and they're going to pass it over three of their shell companies in order to support their particular family members who are taking their water and mixing it into really fun chemical stuff. And by the end of it, maybe 25% of the water will go over to the other side, and then they will cut their water, and then maybe 0.05% of the water will actually hit the front lines for support of the big person that they're fighting. Okay. And then I just keep doing this and having such a fun time with this and I got a whole bunch of people over there in the House of Government that are like just basically burning my nation's flag, allegedly, not really metaphorically, doing stuff that's really not in the interest of the country. And then a certain set of patriots come by who understand how water works, and they kind of go, oh, okay, we see what you're doing there. We're going to make some changes in the back end. I'm not saying that this Federal Reserve thing that I sent to you, but there's whisper campaigns and other things saying these people are misappropriating the water. Are you going to get your water back? You really think so? And then next thing you know, the share price starts going down. People start asking questions, and then they realize, oh, so and so is not getting their water. Their tanks are running dry. Really? I see this whole quagmire of water, but water is already sent out. So then what happens all of a sudden? It's now everybody's taken their water away, and I got nothing left for the hose, and all the people are like wanting to gobble from the hose. It's like, I don't have any left. I need more water. I need more water. And well, if you don't got water, they'll run away, and everybody's taking their water elsewhere. And next thing I got all this frozen ice rinks and beautiful ice sculpture and all that, and I can't melt them down right now. They're on other people's properties. They got a beautiful ice palace over in the Central Park Square, made of all the water I have. I can't collect that back. So I got to go and knock on some doors. But here's the thing: is that means, yes, I can get the people who want water can get backstop for water, and that was the document that I was showing you. But my management team gets knocked off. Management team is gone. Any bonds or equities in my water company are gone. They don't get backstop. So as my organization is cratering, my management team's going to get dissolved. I'm gone, out of the picture. New team comes in, and they take that faucet and they go, hey, pull the valve piece off and say, this is ours now. So, well, what should we look for now? Well, if I were to put this and say is not to mention too many names, but if the USA was sending money abroad for certain regional conflicts, now all of a sudden the instruments and faucets for sending that money abroad have been popped off. The people who have ill-gotten gains, they said, you're allowed to keep your funny money. You can keep your $5 million person. I'm not going to mention names here. You can keep your 5 million. You can keep your 10 million. You can keep that. You can keep that money. The faucet's gone. Your toy is now broken. So what does this mean? Well, next thing you know it, seeing I don't have the receipt here, but if you do a Google for it, say, oh, the IMF is now sending money to particular country at war. Used to be the United States. Now it's the IMF. Oh, how things change. Interesting. I think maybe we caught a couple big fish that were not fit for the fish fry. Signature Bank, Silicon Valley Bank. So that's the story I wanted to show you. Um, yeah, so is it really a bailout that's happening? Nope. It actually costs money for this money, but you just seen a couple of these banks play toys are taken apart. That means possible shenanigans during elections. Well, there's less money conduits for that now. You always have to go to the money. Everything's plumbed. All the plumbing is money. Every chess move that you make in a political or geopolitical sense costs you money and energy. Okay, those are the two things I talk about here quite a bit. Money and energy. And this one was there's a significant money play. Keep an eye out on Europe because a couple big spigots that I was just talking about got cranked. And take a look at the German, US German 10-year spread. It should be below zero. It's above zero, approaching zero. When it hits zero, you're going to have a bit more of a reckoning within Europe. So keep an eye on that in the couple weeks ahead. As always, thank you and enjoy your week.